Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of EURJPY, Euro Japanese Yen for Monday. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis and do not forget to check out the Forex analysis playlist on my channel for the analysis of other pairs. So let's get started. So this is the 4-hour chart of EURJPY in front of us right now. In my previous video, in my yesterday's video, I told you that market will be facing some trouble to cross this particular level because this level 130.32 was acting as a resistance for the market. And this was the main reason I told you that if market crosses also the 130.32 level, still you should give some time to the market to settle down because we need confirmation whether the resistance has become support or not. And that's why I told you that you should wait for 4 to 6 hours and just observe the price, because you can see that yes, market did cross the resistance level but market failed to sustain, which means that sellers are present in this level. Try to understand the market emotion, try to understand the market psychology here, which means that sellers are sitting at this level and they did not allow the market to cross this level. As a result, price came down. Simple. Therefore, this level is a resistance, still a very much valid resistance for the market. And if we look at the overall trend of the market here, then you can clearly see that overall trend of the market may be towards the downside. Okay. But as we all know, after the Fed's meeting, there was a turmoil in the market. Dollar started falling and currencies like euro, pound started going up. Therefore, this portion of the chart is no longer required for us right now. We just need to focus on this portion of the chart because right now dollar is going down, dollar is under pressure, euro is strong. Okay, so if you look at here, this is the DXY chart, US dollar chart. You can easily see that after the Fed's meeting, the whole setup of the market has changed, and right now dollar is going down. Dollar is under the influence of sellers right now. Okay, so we just need to focus on this particular portion of the chart here. And if we just look at this chart here right now, then we can easily see that right now the market is in uptrend. There is no doubt about it. And as we all know, the thumb rule, the basic rule of the market says follow the trend. Trend is your friend, trend is your best friend, soulmate, wife, husband, whatever. So following the basic rule of the market, okay, so if the market is an uptrend, then we should mainly look for buying opportunities, and if a market is a downtrend, we should mainly look for selling opportunities. And as we can clearly see that this market is an uptrend, therefore we should mainly look for buying opportunities following the thumb rule of the market. Clear? The second important point is, I have already spoken in hundreds and hundreds of videos, area of value. Area of value is nothing but the best trading opportunity or the best buying opportunity. As we all know, the best buying opportunity in an uptrend market is always near the support, whereas if a market is falling or if a market is in downtrend, the area of value is always near the resistance. And we can see that this market is in uptrend, therefore we will only look for buying opportunities. You may be thinking right now that we have a resistance here, we can short the market here, but still we cannot deny the fact that this market is an uptrend. And let's assume that there are 100 traders present in this market. Okay, out of 100 traders, at least 75 are buyers and only 25 are sellers. Therefore, it is wise to side or take side of the buyers only, because buyers are dominating the market right now. Okay, and the area of value is always near the support, and you can see that I have already drawn a trend line here, because this trend line is a valid trend, valid support, because you can see that whenever market is coming down, it is getting support from this trend line. Therefore, I will request you, my dear friend, to draw this trend line in your trading platform and also mark this level in your trading platform, so that you can understand the market better, so that you can also do the proper analysis of the market. Therefore, we have a support here and we have a resistance here, and this main resistance is the this particular level. Okay, so please draw these levels in your trading platform. 130.30 to 130.50. This is the range of the market right now, okay, for the resistance. And if we just look at this particular portion of the market here, then you can see that this resembles to the ascending triangle pattern. In ascending triangle pattern, we get a resistance like this, and on the downside we get lower highs like this. Market is coming down, but you can see that market is not crossing the previous low, rather it is forming lower highs. Sorry, higher lows. Okay, market is forming higher lows here, which clearly signifies that buyers are present in this market. Okay, buyers are present in this market, and they are very much interested, or they are trying their best to take the price upward. And in a scenario like this, whenever we get an ascending triangle pattern on a market, then there is a good possibility that market will be going up. Therefore, I'm just giving you two trading opportunities here. First and foremost, wait for the market to come down to this trend line here. As you can see, market is in the middle. Do not trade in the middle. Wait for the market to come down to the trend line. So when market will hit the trend line, just observe the market and just observe the price. If you see price bouncing from this trend line, if you see price being rejected, or if market forms hammer kind of candlestick pattern on the trend line, then you'll get the confirmation that the trend line is a valid support, and you can go for a buy order, okay, at the trend line. Just keep in mind, follow proper risk management. Do not risk more than 2 to 3% of your trading capital. That's it. Okay. If market reverses from the trend line, go for a buy. On the other hand, if market crosses this level, 130.50 level, then also it's a buy call for you. So first buy call is at the trend line, and if you just keep in mind, if you enter at the trend line here, if this is a buy level, this will be your exit. On the other hand, your next entry will be above the 130.50 level, as this level is acting as a resistance for the market. Just keep in mind that if market crosses the 130.50 level, still you need to wait for at least 4 hours, 4 to 6 hours, because you need the confirmation, right? You need the confirmation whether the market has successfully crossed or not, whether the resistance has become the support or not. Once you see the resistance has become the support, once market starts trading comfortably for 4 to 6 hours above the level, then it's a clear-cut confirmation that yes, you can go for a buy. Then just click on the buy button above 130.50 level. So these are the two trading opportunities for you right now in the chart of EURJPY. And if you look at the Forex volatility calculator, if you think that how much volatility or how many pips you can expect from the EURJPY chart, then I'll request you to go to the Forex volatility calculator. You will find the Forex volatility calculator on my website abhilashhazarika.com under Forex 101 section. Okay, and you'll also find the Forex sentiment meter if you're interested in knowing how much positions the retail traders are taking. For example, see, 56% retail traders have taken short position, 43% retail traders have taken long position. So there is a confusion going on between the retail traders. They are also not sure whether the market will go up or market will go down. And if we go to the Forex volatility calculator here, this is a EURJPY. You can see that in the 15-minute chart you can expect a movement of 5 pips. In the 30 minutes chart you can expect a movement of 4.9 pips. In the 1 hour chart you can only expect a movement of 4.7 pips, but in the 4 hours chart you can expect a movement of 35 pips. So this is the movement you can expect on the EURJPY chart, and hopefully you have understood the two trading opportunities in the chart of EURJPY. So this is it. Thank you so much. All the best. Take care. See ya again on Monday. Bye bye.